my friend, has an intent, get this now, of mentoring and teaching you some lessons, some tips, some strategies, and some techniques that could save you a lot of heartache and help you to reach success in a lot shorter time. So, my friend, you'll hear with great delight our global ambassador, Dr. Katrina Ferguson. Take it away, champ.
Absolutely. Thank you so much, Dr. Stan, for that amazing introduction. I am super excited to be with you guys this morning. I'm actually excited about that August the 17th event as well. If you haven't seen the flyer, if you haven't communicated with your organizations, you need to do so quickly. It's going to be a record-breaking, boat-sinking, increase type of day. You want to make sure you're in the place. You ever been somewhere where you knew just because you were there, you came out better, you came out bigger, vision stronger, resolve greater? That's what this event is going to be about. As a matter of fact, we've been doing I've had some conversations with some of the people that work with me, and we were talking about some of the taxes that have been submitted for us to look at already. And Dr. Stan, there are some breakthrough increases coming where people have paid more money or not gotten the refunds that they were entitled to. So over the next X amount of time, we should be, some people will be dollars back per year for the last 3 years. So we're talking $3,000, $6,000, $9,000, $12,000, because not only must the IRS give you back what you didn't amend for, or what you didn't deduct that you should have, but they have to pay you interest on that money. So there's going to be some incredible things happening. So what we've done is we said that anybody who comes to that 17th event, we're going to offer them an additional discount on the fees that it costs for those refilings. So we're going to do them at no filing fee cost at all. We're going to do those taxes. So if you show up on that day, just know, bring your last 3 tax returns. We'll help you take a look at them. It won't be done on that day, but we'll go over them with you. And then if there's something there and they need to be amended, then there will be, amendment fees. The tax fees, right, for the work that's done. But there will be no filing fees. Those will be subtracted, meaning that will save you up to $150 per year. So you want to make sure you get your $25 ticket and get to that Jacksonville event, because the benefits are going to continue. That's just one of the many. I know that the corporate office is sending us. I know Dr. Stan is bringing some things. So we've got a great, great day planned for you. So I'm excited. Again, I am Dr. Katrina Ferguson, and we're going to go ahead and get into this next installment in our tax training. And just like all of the other tax information that we have shared over the last whatever period of time, everything that we talk about, please, because someone said this to me, and it shook me a little bit. They said, oh my gosh, now when I do my taxes, and I was like, okay, hold on. Now, I didn't do my taxes this year and then come to you and say, okay, this is how you minimize your tax liabilities. These are all the deductions you could take, because there's some things that you have to know in this process. You definitely want to use a tax professional. You want whoever's been doing your taxes. You don't have to come to us. Don't misunderstand. But you definitely need to go to a tax professional who specializes in small or home-based business taxes, so that you can make sure that these things are done properly. Which brings me to our subject today. We're going to talk about the most powerful, underused form in the entire tax return, right? The most powerful, underused form in the entire tax return, the whole filing package, okay? In the process, though, we're also going to talk about how to shield yourself from the IRS inquiries, which is, in layman's terms, an audit. How do you shield yourself from an audit? How do you protect your tax return from that process? Well, as we get started with that, doing the things that we're talking about does not mean that you're never going to be audited. That's not what that means. What it means is that if you are audited, you will be in compliance, that you will have the necessary records to validate the deductions that you've claimed on your tax return. You'll have the necessary code numbers so that you can say to the IRS agent, the revenue agent, a valid deduction. If you're working with a home-based business professional, then because they'll know. They'll have the record. Okay, so one, don't be that letter from the IRS. If you get that love letter from the IRS, just understand it simply means clear expenses. Let's make sure that it's accurate. And understand, here's a big, the number one reason that the IRS starts to look at your return funny style is because of math errors. First of all, doing returns longhand. But they are. As a matter of fact, just last week, I had a lady call our office and ask them to help me finish these up. I said, what do you mean finish them up? She says, well, I have all the forms filled out. Whoa, what do you mean you filled out the forms? Who does that anymore? In 2019, we don't fill out forms. The software does that for us. The software helps. We need to know where to put the numbers and what we are allowed to take, but the software ultimately does and checks the back for us, so we can kind of get rid of that. But the number two reason, correct Social Security, submitting those tax returns with an incorrect Social Security number, which is why we like the clients that we've had year after year after year, because we know that the foundational information is correct and complete, so that we don't have to worry about that being one of the reasons. So if we know that pretty much you got the Social Security number on tap, you know it, you looked at it before you signed it, you've got the correct address information, right, contact information, and we know that you don't have a math error, then why are people still getting audited? Well, because most of the audits, okay, we said the number one reason that they take an interest in your tax return, but most audits happen, they're just random. They're randomly selected by the computer. Most audits are randomly selected by, I probably should have said number two was the math error, number three was Social Security number issues or contact information issues. But the number one reason is it's just a random audit. They just happen to pick yours. So don't let an audit, especially if you have a solid, reputable tax preparer or person helping you through the process. You don't have to be afraid of them. I mean, I've told you my story over and over again, how we went through 2 serious audits. And then we've gone through other audits with other clients and had similar outcomes. But what we do, we prefer to just not have to deal with the whole audit situation at all. So we deal with these things on the front end, and that's why I'm going to share with you the most powerful form in the entire library of tax forms here in just a moment. So when most taxpayers hear that word audit, we get that gut feeling. It's kind of like you feel when you're like speeding down the highway, you see those blue lights in the mirror. So disallowed deductions, interest and penalties from the IRS. Last year, that contributed to the Treasury about $50 billion. And no doubt, this year is going to be even greater, especially with all the tax year changes, right? $50 billion is what was created through audits last year. Remember, an audit is nothing more than just an attempt to see if you are being accurate. Is this truly all of your income? Is this truly your expenses? Are these truly deductions that you qualify for? And as long as that's accurate, just like if you pass a cop in a 65-mile-an-hour zone going 65 miles an hour, there's no reason for you to have a gut check because you're operating within the rule of law, so no problem. As long as your tax returns are legal, as long as they're adequately documented, then you don't have any problems. Being honest is not going to stop you from being audited, but it should stop you from being afraid of it. So let's talk about some of the steps that you have to take, that you must take, so that you can make sure that your tax return does not draw the interest of the IRS. We're talking about how to shield yourself from the IRS in this most incredible form. First, when you are documenting your deductions, make sure that you can produce proof that you incurred the expense. Okay, what does that look like? Well, proof that you incurred the expense is going to be either an invoice, something on your calendar, or your daily diary that can prove that you had the expense. You also want to make sure that you can prove that you paid that expense or paid that invoice. This is why we spoke earlier about making sure you have a designated account for your business expenses, a designated card. It could be a debit card on that same account for your business expenses. And then that everything comes into a location or two, so that if in fact the IRS says prove your expenses and income, all of it is in the same place. Keep a copy of those checking account invoices all in the same place. And remember, and this is key, I've seen this happen as well. When an expense is charged to a credit card, your Visa, MasterCard, Discover, American Express, something like that. These are bank-issued cards. That is deducted on the day that it is actually charged, the day that it is incurred. So when you swipe that card, that is considered the day that the expense is incurred. Why is that important? Because if you say it's a December 31st, 2017 expense, and you paid with it with your store card, like Office Max, Office Depot, Best Buy, something like that, those charges are not deductible until you pay it off. So there's a difference, there's a distinction, so that you know what year that you can deduct those expenses in. So just kind of keep that in mind when you are documenting your deductions. And as I said, secondly, make sure you have a separate checking account, okay? And in that separate checking account, understand if the IRS asks for those checking account records, every single deposit into that business account is going to be considered earned income, unless you have some type of a designation or annotation that indicates otherwise. So make sure if you loan your business money to pay some bills and you put it in that account, make sure you document clearly that it is a loan to the business and not income to the business. Otherwise, when the IRS goes through your check statement, they're going to consider that deposit as earned income, understated your income on your tax return, which means you'll owe taxes on that money plus interest and penalties. Just a little side note, okay? Just keep that in mind. So any money that gets deposited into your business account is considered earned income unless you have adequate notations and proof that it is not earned income. Third, if you take the advice that we gave you about hiring your children and your spouses so that you can deduct their wages, there's about 5 things you want to make sure that you have done. And I love it. I got this call last week as well from one of our clients and I just did remember what you said about, and I prefer to get that call now than the call from the auditor or from him later saying we can't get through this IRS audit because I didn't do these things. If you hire your child or your spouse so that you can deduct their wages, make sure you get your employer identification number. Get that EIN from irs.gov. And make sure that you also have that family member employment agreement that gives the specifics of what they're going to do, how much you're going to pay them, just all the details of that employment. If there are benefits involved, what they are. Make sure it's in writing, make sure it's dated, make sure it's signed. I may even go as far as make sure that it's notarized just to have a legal document in my files that proves that this is what I intended to do, this is what they're doing, and this is totally legal. Thirdly, make sure that the work that they perform is documented, whether it's on a timesheet every week or month. Maybe they just have kind of a ledger or a daily diary. Make sure there's documentation that you can go back to that is in alignment with the deposits that you're making into their personal accounts out of your business account. Make sure that that paper trail is there. Next, make sure you're paying them on a regular and a consistent basis with an account. That was one of the questions that this client had. Well, we're all at the same bank. Why can't I just deposit the money directly into his account? I said, well, if you want to set up an actual payroll service, do that. But what employer is going to run to the bank and put the money directly into your account every week or every couple of weeks? It doesn't particularly happen like that, not normally. And remember, we're not doing anything that outrageous. We're not doing anything out of the norm that we would do for any other employee of our business when we're hiring our children and our spouses. It just has to be documented. It needs to be in writing. And remember, finally, if these are adult family members or employees that are 18 years or older, you still have to withhold and pay the Social Security and Medicare taxes. And you have to check to see what your local government says. And with your tax preparer in terms of what the federal law is, in terms of federal taxes for each individual situation. And you may even have to prove that what you're paying them is reasonable. And you can check that just based on what's going on in your area. Go online to Indeed.com or just call around. Look at the Help Wanted ads and see what other people are paying for that. I mean, another way you could do is get an outside company to give you a written estimate and do all that so that you can have that in your file. But those are some of the things that you want to make sure. Those are foundational to being able to take the deduction for the wages of your children, your spouse, your grandchildren when you hire them. Fourth, it happens to show that you have a loss for the year, right? At the bottom line, you have a loss for the year. You might have to prove that you are working towards making a profit, that your goal is ultimately. Talked about this earlier. The way that you do that is with your business plan. And because of the company that you're involved with, your business plan, again, is comprised of the marketing plan, your compensation or profit plan, as well as just the documents from your specific company. The other thing is always have something that you wrote up, maybe your mission, your vision statement that becomes a part of that business plan, which shows that you are intending to make a profit just your hobby. Think about as many times as you go into a restaurant and you can tell when it's a family-owned restaurant, and you can tell when it's being run like a family, and you can tell when it's run like a business. We have a restaurant here. It's called Rustica Osterica, and it is a northern Italian cuisine, but it's a very small restaurant. I don't think the restaurant is as big as my house. Well, what it is they intend to keep it small. You can't get in there without a reservation. Never once have I walked up to that door and it didn't say, sorry, we are sold out for tonight. No tables available. You have to call. Now, when you call food and say, hey, I want that, pecan encrusted lamb with this, you can do all of that. Very, very boutique-ish for a restaurant. But it's owned and run by a family. You can't tell other than the culture. They are handling their business in there. And that's how you have to be about your business. It can be friendly, it can be familial, but you have to operate as a business. Next, never answer an audit or attend an audit alone. Don't do that. Instead, retain an enrolled agent, a tax professional, not just a tax preparer, someone who has an accreditation, maybe a tax attorney or a CPA, to help you with that process. Give them a limited power of attorney if you have to actually show up for the audit. Give them limited power of attorney so they can go in your why. I'll tell you all the reasons why here in a moment. But it's important that you just never ever show up alone. And then you want to make sure that let's go ahead and talk about why you shouldn't attend it alone. You don't want to go alone because, think about it, you're going to be walking into an adversarial environment. What you did was wrong, that you are a cheating taxpayer. That's what they want to prove. That's what that is what they are there to prove, that you intended to cheat or defraud the government. So you're walking in where these auditors, in my experience, have had really kind of heavy-handed tactics, kind of bullyish, because they believe they have the upper hand. They know more than you, and they know that you're stressed and concerned about the outcomes of the situation. So they'll start asking you question after question after question, in a way that you feel like you have to answer them right now. Even if you don't have the answers in the moment, you'll make something up, or your brain will say, I think I remember this. Think about it. How many of us can't remember what we had for lunch yesterday? Forget about what I did or bought when I was at Office Depot 2 years ago, which is the date of the expense that you're asking me about on this audit. I don't remember. Figure it out. And they'll ask you, well, you don't remember what you did? And they'll give it to you like they already know that you're guilty. They already know that you're trying to take advantage of the system. They're going to lead you like a skilled lawyer right to slaughter. So you don't want to go into that environment by yourself. Understand, no one has perfect records. Not one person has perfect records. But some of the auditors will make you feel like yours are the worst ever, right? So don't ever go into that situation by yourself. The career progression for that auditor is related to how many successful audits they complete. You know what that means? How much money they collect from taxpayers. So that's their entire goal when you go in there. So don't go alone. $50 billion is what they collected last year, and they're going to do more than that this year. So you'll be in there speaking before you're thinking, just trying to get it over with. Send someone in there. Don't put yourself through that stress. Let someone who's dealt with the IRS and continue to deal with the IRS as a career go in there and represent you. Now, instead of being an adversary, the auditor is like, oh, you are a professional like me in this area. If they ask that representative questions that they haven't talked with you about or don't know the answer to, they can simply say, you know what, I don't know. Let me get back to the taxpayer, and I'll get back to you with an answer. Because you don't even have to be there. You get a phone call afterward to let you know what happened. There's no way an auditor can put you on the spot if you're not in the spot. You're not there. So the whole entire climate is changing because you're just not even there. So a really good professional in taxes that's experienced is going to get to the auditor and have that auditor feeling like, okay, let's figure this out together. You can even negotiate with an auditor. Some of you, I bet, didn't even know that. The tax professional knows that you can actually negotiate with the auditor, even if there's an error there. But you would not, I would not, we didn't know that going in there, so it just kind of makes it a whole different scenario with a professional. It's kind of like I wouldn't go into a courtroom if my freedom was threatened without an attorney. I'm definitely not going into an IRS situation now, knowing what I know, without a professional, someone who knows exactly what was going on behind the scenes when my tax returns were prepared. Not trying to scare you. I just always want you to know that you have to consider your tax professional as your business partner. Your tax professional is a business partner with you. They need to know how your business works, how it operates, so it can be reported to Uncle Sam in a way that he just kind of says, oh, okay, that's great, because you've got somebody involved that knows what they're doing. And a lot of us have these tax preparers doing our taxes who are not credentialed, haven't studied, and are simply following the path through a software system when in actuality, it is a study, it's a profession. Now, their representation and their only goal is your interest, making it protected. But they also understand how to deal with that auditor in a way for the best outcome, okay? Honestly, an audit can be a good thing sometimes. Like I shared with you in my story. In my audit, we went through the whole process and realized that there were some deductions that were left out. So then, they had to pay me for those. We filed an amended tax return after it was over. It's like the nerve of them on both of them. So sometimes it's a good thing. And now, what are the chances are that you're going to get audited? What are the chances that you're going to get audited? The chances of being randomly selected for an audit are just over 1%. That's it. 1%. That's about 1 out of every 100 taxpayers. 1 out of every 100. And if you follow the rules and have all the records, there's nothing for an auditor to find, so there's no issue. Not at all. Okay? So, now, there's the random audit that we talked about. Then there's the correspondence audit as well. A correspondence audit simply means that they're asking for more information. They'll ask for more information on a specific situation. Like if you claim that and they prove it's your child. prove that you're head of household, which means you have to produce birth certificates, social security cards, medical bills, school records, that type of thing to prove that you were allowed that deduction. Now, the other reason that the computer will kick out a random audit is this. It's if you fail to report all of the income from a 1099 or a W-2. One of the IRS did to the computer said that they gave it the ability to match 1099s and W-2s, data inspectors and your employers to your individual tax return. So if there's a 1099 submitted for you, but it didn't show up on, it's going to create a oops message, and now the computer's going to say, well, what about this money? And then they're going to recalculate your return, and it's going to mean that now that money is being taken account of without any deductions to kind of balance it out. Okay. There's also this thing out there where people are saying, well, it's $100 from a company, you don't have to report that money. That's not true. The way that it's written is unless you earn $600 or less from all sources, meaning you could have 5 jobs where you you could have 6 jobs where you earned $100 each, all 6 of those choose. So when in doubt, put it on the form. If you made more, you have to make sure that that income shows up on your tax computer will if you don't. And then finally, the number 6 is use sworn affidavits to prove what you can't necessarily prove. So, for instance, one of the last documents that I needed was my giving statement from my church. Well, I couldn't find the giving statement, so I got a sworn affidavit from the controller at the church. I could have gotten a sworn affidavit saying that I gave X amount of dollars, right? Instead, she just created another one for me. But sworn affidavits can help you to prove what you have lost, the receipts to prove. So you can always have that as a backup as well. So those are some of the things that you want to make sure that you have in your records to help protect yourself from or shield yourself from a tax audit. Now, let's talk about this form that I mentioned from the very beginning, the most powerful. Underused form in the entire tax return is the form 8275. It's the disclosure statement. You could call the disclosure statement the, okay, what had happened was note. It's the let me explain what happened note. You fill out this form with an explanation of anything in your tax return that might trigger a question from an auditor. So let's say that something is strange in there and it goes to a human. They've got an explanation already attached to the form so they can say, oh, that's why it's like this, so let me go ahead and get rid of it. For instance, we had a client who separated from her husband. They had an agreement about who was going to claim the children. Well, of course, one of them claimed the children and it wasn't their year. So when we filed the other one's taxes, we included this 8275 with an explanation note saying, this is why the child is here. Here is the document, the separation agreement that shows that this parent had a right to claim the child this year, so that we were able to file that parent's taxes, and then the IRS had to deal with the other parent to get the money back. And 8275 is so powerful because you can attach it to that tax return and the computer doesn't recognize it. However, a human will recognize it if there's a problem. So it doesn't create a problem, but it solves a problem should one arise. Super powerful. And if you want to take it over the top powerful, just add that statement. Under penalties of perjury, I swear that this is true. Have it notarized, attach it to that tax filing, and now when they ask the question, if they ask the question, the answer is right there, and you can just avoid that whole entire audit situation altogether. And that is super powerful. That is a powerful form. And I can tell you, I've probably seen 2 in my entire, 20-year career. 2 of them. I've seen other people on other people's tax returns outside of our office. We use it quite a bit because my thing is let's deal with it on the front end so we don't have to prove it on the back end. Because when you deal with something up front, think about it. When you have someone come and tell you up front, okay, here's the scenario, because I know you're going to ask the question. So let me just go ahead and give you everything you need right now, and then that way we don't have to talk about it later. That's how I live my life, right? So we want to make sure that we do the same thing. Use that form. It's powerful. Or have your tax professional make sure that they attach that when there's any question about anything. Now, the IRS does have another practice that's kind of foul, but they do this. And I just want to bring your attention to it. I just want to bring one of these in your mail that you don't respond the way most Americans do. And it's these correction notices that they send out. That's not, so audits, they're not the only way that the IRS gets money. Sometimes you'll get a letter from the IRS that you failed to report some interest, maybe on a savings account that you forgot about and forgot to add it. And they can wait 2 years to send you this bill, and they do it intentionally so that now they can also charge you interest and penalties on this 2-year-old debt. And the letter will say, hey, if you agree with us, go ahead, just send the money and it'll all go away. So what do people do? They are like, oh my gosh, I don't want to deal with the IRS. So they write the check and they send it back. Guess what? 80% of the time, those notices are wrong. They're wrong. 80% of the time, that correction notice is incorrect. How does that work? So what do you want to do with that? Well, just write a little letter that says, I disagree. I disagree with the IRS's opinion. I don't owe any additional money. I disagree. I don't owe any more money. And guess what they have to do? They have to now investigate it. And you know it takes the IRS a long time. And you have 60 days from the time that they send that letter to respond. So wait till day 40, 45, write the letter, send it certified so someone has to sign it, and abatement. And of canceling the debt as though it never existed because you don't believe you owe it. And guess what they have to do? Unless they can prove it, they have to abate it. Most people pay it. They're not going to know. Most people are just going to pay it. You're just one that knows the truth, and you're not just going to pay it. Take it off, and you can go on with your life, and they'll go get the money from someone else. It's true. What you don't know can hurt you. Another key, though, that just gives them stress. Did you know that you don't have to file by April 15th? If you don't file by April 15th and you do file a Form 4868, you get an automatic 6-month extension on your tax filing deadline. That slides your due date to October. How many of you have rushed around trying to get to your tax preparer or your tax professional by April 15th and just nobody even told you, you know what, you don't have to go through all that. Let's just file an extension. As a matter of fact, one of the strategies is to not file by April 15th. Some people have a strategy that says, look, you know what, intentionally, I'm going to file this 4868 and just hold off until August. And hold off until October. Why? Because think about this. The random audit is, the number of random audits is determined in advance by the IRS. So if they say we're going to do 1 million random audits this year, there are already 1 million tax returns filed by April 15th. So if they already have their 1 million random audits and you don't file yours until October, your chances of being audited goes from 1% to 0% because they already got their 1 million for the year. So some people use that as a strategy. I'm not saying 100% of the time that works because it could be some of those other reasons, but for a random audit based on nothing other than it's random, that is a pretty good strategy. Not 100%, but it's a good strategy. So know that. Don't stress yourself out. Have your tax professional file an extension for you, right? And here's another thing. Do you know that over 80% of tax filers get a refund? Some people think a refund is actually a good thing, and it's not. What that refund means is that you loaned Uncle Sam your money in the form of taxes, and he's going to pay it back to you as an interest-free loan. You loan the government money, and you're not even going to get interest when he pays you back that refund. You've lost access to that money throughout the year. Even if you have an emergency, you can't go get it back until tax time. And you got no interest on the money that you loaned them. Why not keep the money yourself and just give them what they're due? Now, it calls for a level of discipline, because if you invest the same money that you've been, or just reallocate it, instead of giving it to Uncle Sam, put it in your own investment account somewhere, now you can grow some wealth on the left side and stop giving Uncle Sam all this money so that you get this big refund in the year at the end of the year, so that you can do it, buy furniture, a TV, cars. It's amazing, because I watch every year around tax time, if you notice, fast food restaurants, retail stores, they all have help wanted signs in the window. Why? Because these people are getting all of these refunds, so they quit their jobs thinking, oh, I got $6,000, $7,000, $8,000. Their money does not last that long. Instead, how about investing that your W-4? Fix your W-4 so you're not getting this huge refund and using that money throughout the year, or investing it. Because what happens when your tax deductions go up, the taxes that you pay should go down. And that should leave you more money. If you're W-2, that would give you more take-home pay. So one of the things that we do for our W-2 employees is, the first things we do is look at their W-4, see how many exemptions they have, what they're having withheld from their payroll, to see, are they paying too much taxes throughout the year? So we can kind of balance out whether, instead of getting a big refund, have your money throughout the year. And if you have too much money at the end of the month, put it away. Invest it in something. Build your business. Build a house. Do something productive with that money. There are plenty of people that could use it. So when you put it all together, here's the thing. What is all of this that we've talked about? What does it mean to you? You can save a ton of money in tax deductions, a ton of money, if you simply operate a home-based business, if you know what it takes, if you've chosen a solid one. If you correct that W, you can even bring home more money during the year. You can call that an instant pay raise. Literally, you can change your W-4 with HR and have more money in your check next month. And you should be reviewing that W-4 every 90 days anyway. And you have to be careful, because I've had people say, okay, I'm going to take X number for 6 months, and then I'm going to drop it back and pay taxes for the last 6 months. And then they never drop it back. So at the end of the year, they have a big tax debt. Again, you want to work with a tax professional to put it all together. But the biggest thing that you can do is look back at what's happened over the last 3 years. Get your situation structured properly, and see if, in fact, there's that loaned Uncle Sam for the last 3 years that actually should be in your old accounts that you can get back based on amending those tax returns. And that's why we offer that 3-year free look. If you want information, believe not just saying I haven't done this the entire time, but just go to EZ, the letters EZ, incometaxes.com, www.ezincometaxes.com. Go to the Contact Us form so that someone from the office will reach out to you, and we can help you go through those forms and see, is there money there? If there's money there, great. If there's no money there, you haven't lost anything. We can help you with this situation. If you need to know what other questions that you need to make sure they can help you with your home business situation, we can help you with that as well. But understand, everything that we've talked about through these Tax Tuesdays isn't for everybody's situation. Every situation is completely and totally different. However, you just need to understand foundationally that there are some huge and things that are on the law books, they're in the IRS code, in those 900,000 pages that can assist your family going forward. So I appreciate your time on this Tax Tuesday. Again, I am Dr. Katrina Ferguson, and I will turn the call back to you, Dr. Stan.